All right. Sorry, I wanted to get this out before the week started, but all my shifts happen to line up Friday to Monday, so it's hard for me to do it when I'm at work sometimes. But basically, what I was looking at was starting with the weekly, and I know we're at Tuesday, so we already got that Monday run, but we have this weekly low that we tagged, and I still like to use the same thought process that we've talked about before in the past that we use on all time frames, where when we get a major low or high ran, price runs back to the imbalance. And so we had a weekly imbalance right here, and that's what we got on Monday. Tuesday being a holiday, okay, so price runs the low, comes back up, we gap up, and then we hit this weekly imbalance. Now we put in a up close candle high, and then we got a pretty nice down close weekly candle that came back to the EMAs, showed the initial reaction off the 2 weeks previous low and the EMAs. And then now we have this reaction from the weekly volume imbalance, which is what I wanted to see on Monday. So if we go over to the daily, all right, we're gonna have to switch daily over here. Okay, if we go over to the daily, and what do we have lined up for the weekly volume imbalance is we had this Monday opening price with the Monday candle, which was that 398 area open, yeah, 398.50. And that's what we got for the weekly coming back into that volume imbalance. Okay, so then we have holiday. Now, Tuesday levels a little bit tricky because the week before, when we were talking about, these this area of price, I had mentioned that this is a possible breakaway gap. I just used Sadie's pivot ribbon. Sadie pivot ribbon. Public indicator. Um, so talked about last week that as this gap was formed, really wasn't looking for Thursday to go into this gap, but possibly get close and hit Thursday low, which it ended up not doing, which was fine. Um, and then we got the push down, and then Friday, right, weekly low. Okay, Friday opening price, which we got tagged into. Nice little rejection there. So if we don't get a lot of volume today, what I was kind of expecting or what I'm looking at is get the continued downtrend. And we'll go back to the weekly for that. Is what I would like to see is that we took the low, we came back up and tagged a rebalance. And if this is, we have this small body candle or this weekly range, and then the previous week closed below that, then I'm looking for this movement back up into here almost to be used as an order block for some lower repricing because we do have a lot of imbalances below us. And again, kind of a tricky market. We're looking at the weekly, and they've had left a lot of imbalances wide open where it's just not coming back for those imbalances, and it's continuing to push higher. I mean, this gap up, and I believe this is a wickless candle. Let's see, open and low is the same price. Yeah, so this gap up and wickless candle, look at the weeks have not come back for that. We've just been cruising along the EMAs. So we have some imbalances along the way. Um, Kind of what I'm looking at as far as ranges as well is this is a 3 bar high where we put in a definite high, right? Come back to the EMAs, we push higher. And we got this low right here, kind of a 3 bar low. It's a prominent high and a prominent low. And nothing's returned into this range whatsoever. And the 50%. So we haven't even got a move out of the range, then back into the range, let alone a retracement to 50%, which happens to capture this imbalance and the wickless weekly. So there is a lot of, when we kind of zoom out on this, like if we were looking at this on the 5-minute chart or the 15-minute chart, even the hourly chart, this would almost seem to be kind of like a high resistance pattern with a possibility of some uh, low resistance move just to run stops on anyone that's been long from way back here. And we can kind of see that in the past in smaller chunks. This is a pretty big leg of price. Okay, so I'm kind of always in the back of my mind being prepared for that kind of scenario. Hey, good morning, BNB. Because we've had that in the past, and here's that. This was kind of a nice setup because we came down here and we failed to break above this high. And again, we really got a big closure back down into this candle. And on the daily, it actually looked a lot better. If we go back to that. And I think we had some holidays around this time too because there's some really small ranges. But look at this candle closes below a bunch of these up close candles. So one candle takes out multiple. That's like, to me, that's a where you're looking at, okay, there's a possible change in the state of delivery. And what do we get? We got the subsequent sell off on the weekly, um, with a lot of lows put in along the way that hadn't been ran. Okay, and the equal lows down here. All right, so now we're looking at this daily chart. And we build a top here on the daily. Lot of look at these candles compared to these candles. Kind of similar fashion where when price starts putting in a lot of range but real small bodies like these doji candles, that's usually an indicator of price offloading positions and building another position, right? Because it's constantly um, running liquidity on both sides, which is done purposely to get as many people offside, right? And then you get like a big down day like this. And we can see kind of a few more examples of that. Price runs up, takes out an old high, kind of offloading positions but building shorts, and then like making it like, is it just slowly moving down, then it's gonna pop up again, but then it drives down and runs, a weekly low in that cycle of price. Kind of same thing right here. You get that big Friday sell off. So we got the Tuesday sell off, which we had these 3 candles create the high, kind of prices hanging out right here, we get a huge sell off, and now we're failing, price is failing to continue so far to close back into this range and move through this range. So I'm kind of looking at possibly we're gonna have a smaller day today just because of a low volume bank holiday. I'm gonna keep a eye out for possibly like a IO Fed entry where maybe we just get a wick now into this what was a breakaway gap to push price down here, where maybe we get this Wednesday high ran, okay, kind of induce longs, but use this because on the daily right now, this is still an imbalance. And so if price, if we're looking for price to push lower, this could be a good run into this fair value gap, and which is kind of back into this order block. If we look at these three candles in that fashion, okay, if I just measure out the candle bodies, we have that as a possibility, or small, and then we just continue to push lower. So we had the high of Monday ran by Tuesday. And so I would look for Wednesday to come down and break the low of Monday or get pretty dang close. Now this is kind of interesting because as we approach Friday and the government shutdown is ending, are they going to like give us numbers Friday, like NFP numbers? Is that going to pop up on the schedule? I got to go look at all that. But again, we have, remember we were looking at Fridays, like, and we like market likes to use threes, and we had these Fridays over here where it's like, okay, it ran 1, 2, 3. Well, now we have 3 Fridays set up again, and we do have this major imbalance here, okay, where prices come down and we don't have any candle bodies through here. So, do we have a possibility of maybe Friday pushing through here and creating what's needed for the imbalance right here? Possible. It'll be on the radar for the week. But again, just seeing how price plays out. But that's kind of what I'm looking at and what I'd like to see. And go back to the weekly. What does that really look at? So imbalance and big imbalance. And really, if we're looking at the weekly, if this weekly pushes lower and we get the tap up into here and then the drive lower, let's just take this off for a second. Okay. That's almost like a 2022 model, right? So we have a high, okay, creates a low. We drive up through that high, take it out, close back down, back into the order block, and then drive lower, completely closing below this leg of price. Okay, so for me, that's going to kind of determine if the weekly is going to retrace into some deeper levels. So this weekly open right here, we can take this off for now. It's about right there. If we get price close below this weekly open this week, then that's kind of a good sign for maybe some continued lower prices. Does that make sense how I'm walking through all this and just kind of like looking at structure on the higher time frame and seeing what it's given us so far and kind of like what I'm what I'd like to see and what I'm expecting. Obviously, if we close above this, then or we close pretty high into this weekly candle, then I'm looking at higher prices, and this idea is not the idea for now. So I'm just kind of giving like based off of structure and candle closes. And if we put the EMAs back on, really if we close below here, like that's not even down to our deeper EMAs. So we got our 8, our 21, and that would just be a weekly move like into deeper EMAs. And then we have this one down here. We got fair value gap down here. We got a lot of liquidity right here. Pretty smooth bottom for the weekly. Equal lows right here. I mean, so it's not this much of a move down really doesn't mean anything. Now, if we return back up and now we're holding below the EMAs and we start pushing lower, then we could be looking at a much deeper retracement, maybe back down into here. But I mean, even look at this weekly move, how it turned the EMAs over and then came right back up and started trending up again. Pretty deep retracement, back up, another deep retracement on the weekly, and then continues trending up and starts taking out like long-term weekly highs. So that's why, like to me, if we start moving down, it's nothing out of the ordinary, basically is how I look at it. Because we haven't had any deep retracements. This was our last deep retracement. That was back in September. Everything else has been just hovering right along and continuing to push off the EMAs. As soon as we hit the weekly 8, it's popping back up again and continuing to move up. All right. So then I just move over here to the 4-hour. So right now, 4-hour structure. At the top, which is where we have the daily doji candles, we have a lot of balance. So either price is going to push past all this, or this has been balanced on purpose, again, building orders, preparing for shorts, and it's going to test the unbalanced areas that we've built along the way. And there's a lot in this area. And it's been tough too because it's been creating imbalances as it's been moving. So right, all these days where we're like gapping up, gapping down. I mean, we've had gap right here, gap right here. This gap we've only had down close candle through. So don't be too hard on yourself if you've had a hard time with some directional movement, because this has been a little tricky and it's required a little bit of patience. So this flat candle, to me, I'm again based off of how I describe the weekly and the daily. Like if this is going to be the target, then the week needs to start closing above here. Okay, and right now we're setting in lower highs. Okay, high at the very top, we run that high and then lower high. Okay, this high does not run this high, lower high. Okay, lower high, and you can see that along the way. So see how each high is kind of like almost getting there, but not. That's almost, I like to look at that as like price is rebalancing itself, but it's saving it for later. Because as it rebalances on itself on the way to a target, that sets up for a low resistance liquidity run later down the road. So far, like this movement up right here on the 4 hour, we're pretty much rebalanced this whole leg. And if this was the start of our daily, that previous week, okay, and I just drag that line across, we closed below it, right? Came back up, and then this candle right here, price failed to close above it. Okay, so if I just highlight that, look how prices reacted. Look at how the wicks held 50% of this candle. We get the wicks ran, but bodies are really holding it. And then this leg, what's our reaction off of this leg of price? Let's just zoom in on this area. Okay, so this is a weekly open. Price cycles through, we close below it, we go back into the range, build orders, and price gets sent way down here. And now I'm looking at this candle that closed in the range and then held price below it. Price is yet to close above this candle. Okay, that's important. So then we're marking that out, and we get this sell off. And then look what happens to this price leg that now leaves this weekly range that is a potential bearish order block. We get right up to the open, and we get the sell off again so far. Okay, now this is a low volume day, and they love to use low volume days to just kind of grind price in a direction and really it's their day to use to make people still wonder like, man, which way is price really going to go? Because it's a very um, grindy day. So immediate targets for me is we have now balanced this leg, right? This price leg came down, this price leg comes all the way back up, and this is pretty much balanced on the 4 hour. So unless we get like um, Tuesday closes and then Wednesday really like pushes higher and starts getting back up into this range and we close back into here, um, really I'm kind of looking for price to continue lower. And we have this volume imbalance down here on the 4 hour. So this is kind of an immediate target. And we might get a little bit of stalling, okay, because we have these two down close candles. This candle really closes above these two. So it's almost like if it would use this as an area to like, oh, we're going to rebalance this and then pop higher. So it might close and then we might get some reaction back up and then hopefully a push back down through. It's kind of what I'm looking at. This whole leg starting from this low has yet to be rebalanced. And then we obviously got our big major imbalance down here with some equal lows. Okay, so just on the 4 hour chart, we're looking at lower highs getting put in, and I'm going to watch this area. If price pushes through this area, then I need to see where, we'll go back to the daily real quick. Just have this marked out. Okay, that is this showing on this chart? Let's look at visibility, hours. Okay, perfect. Okay, so this is the daily fair value gap, and we're looking at maybe Wednesday will reach up and tap this gap and run that Wednesday high and then close below this Wednesday low for for tomorrow. That's now we got a volume day. Let's look at what that looks like on the 4-hour chart and what we would need to see. Okay, so here it is. And so we'd be looking at some sort of reaction off of like these relative equal highs where we get up into this area. This is the daily fair value gap. And so if we do get that, then I'd like to see a reaction off these highs and a reversal. If we start closing in here and price starts showing higher highs, okay, then we'll see if we continue the week bullish. So I'm always looking at it like what should price do around these areas? Like if price is going to go lower, it's either going to keep this as a breakaway gap and we're just going to get that push, or there's a possibility of it wants to run highs one more time before it really pushes lower, okay? Which is a possibility. So that's that like institutional order flow entry drill, or just that kind of tap of that fair value gap and then push lower, or we're starting to close higher for a more bullish continuation. So we might get the low first and then close higher on the Wednesday. And where's that Wednesday low? Thursday. Okay, so here's the Wednesday low. Okay, so if today we get a push down here, which I don't know, it doesn't seem like it's highly likely just because of what the day is. Um, but here's Wednesday low. Okay, and then this is the Wednesday high right here. So just going to keep those two areas in mind and watch how the 4-hour price structure plays out. So that's kind of my thought process for a higher time frame right now. Again, if just keep reading price action and keep looking at charts, because the more you do it, the more you're going to see like, hey, price should do this if it's going to do that. And that's what you want, because also for when you're taking your trades on lower time frame, you want to be able to say like, hey, if price is going to go to my target that I have here, this is what it should do. And when it's not doing that, that should be the red flag for you to be like, hey, maybe I need to move my stops into profit. Maybe I'm going to exit the trade now, or take uh, 50 to 80% off because I'm not liking the way price is moving, and really develop that kind of like instinct and gut feeling for how the candles are printing and moving it and what they should do from what they're telling you. So that's it for my higher time frame outlook. You guys have any questions for me before I hop out of here? Nada? Right on. Oh, BMB, what's up? Oh, no worries. It's recorded, BMac. I'll uh I'll upload it and I'll post it in my channel. for the session, I I I go through that same process. So it's always weekly because the weekly for me determines where are we headed like over the next month, month and a half, 2 months, right? And as long as if you look at price action right here, okay, look at this long trend up for 2 years on the weekly chart. At what point would you say, oh, I need to be really bearish? Why? Because price returns to the weekly EMAs and does a deep EMA retracement. Well, we get that on the daily all the time. We get that on the 4 hour all the time. So right here, what do we have? We have a flip of EMAs and now it's holding, 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 holding. Okay. This is when I would say, oh, yeah, I need to start looking at, I need to trust that if this is what price is showing me, then what are the probabilities of what's going to happen next? Okay. So for me, we've been holding, holding, holding the 8 weekly EMA. Is there a possibility that if this weekly candle doesn't close high into this weekly candle and we get this weekly candle closing lower, oh, then there's a possibility that we retest some of these deeper EMAs. And then I look at what's possible for the weekly. So the previous week, we're up here, we have the gap. And so last week, we failed to run this high. We're starting to close lower. Where's my target? Oh, back to the EMA's weekly low. That was the target for me. Okay, you can look at these weeks. We gap up, a very strong gap up. That means this candle body coming down into the EMAs and this gap up means we have price very reactive off of this still. Okay, what do we end up targeting? Ends up targeting the weekly open, and then the next week, the manipulation, and we run that week high. Yeah, I always use weekly, daily, 4 hour because it's all structure. When you're reading price, like you want to be able to read structure on these higher time frames because these are big candles on the 4 hour. And so when you're getting structure like this where you're actually reading like the ranges, like okay, this was 3 days of up movement, and then we end up closing below this range. There wasn't a tap of this volume imbalance and push higher. There was a tap, and this is again, I've kind of like showed you guys this on the 1 minute, the 5 minute. Okay, here's a high put in. And here's my low put in. Okay, what have I told you on the 5 minute when we're like trading and we're looking to average up? If price fails to meet the 50%, and now we're closing. So see how this candle comes up? We have a fair value gap. We run the high. We don't tap 50%, and now we're closing below this candle. That means price is in a hurry. It wants to go somewhere else. The objective is to go somewhere else. And this is telling you something. This range right here, price comes up a second time and still hasn't hit 50%. Okay, so that's why I said it's possible that Tuesday is a small day Wednesday we get a retracement up because here's Wednesday high. Maybe we get the tap of 50% of this range and then price continues lower because that would get a lot of people off sides because everyone's bullish right now with everything. So then if we manipulate up before we go down where we're at, where price has been semi-questionable, that get a lot of people off sides. But that would have to be like a wick and then really wick away. I wouldn't want to see price like um, closing really high. So I just say that's how I look at it. I look at like what ranges are holding, and if ranges are holding, then prices continually closing below um, new ranges put in, then that's how I'm determining like, okay, so then where's the next objective? And so here's a prior range as well. Okay, we haven't closed below this range yet. Yeah, there's a bunch of videos that I've gone over it more, AB, in my channel. Are we past 50 of that H4 wick right now? The most recent one. You're talking about the prior candle, or are you talking about this one? This one right here. Yeah, we're prices move far past 50% of that. But again, for me, Tuesday is a very low volume day. So this day is for me like, okay, yeah, you can trade it if you want. I, I have no, I'm not trading it at all, just because I don't want to deal with how choppy price is on the lower time frame. It's a ton of retracement. It takes forever to get to certain points of interest. It's very grinding. So that's not enjoyable. Wednesday, I want to see what happens with Wednesday. Yeah. So, but again, I look at a few things, right? We have highs and lows ran, major highs and lows, okay, which 4-hour structure gives because every 4-hour candle is pretty much a major high or low. Okay, balancing of ranges, right? And imbalances. So then what are the odds of after one thing happens, where should price go? And what do we have for in terms of ranges, where are we at within the premium and discount? So I think I think it was the daily. So the daily, I just did this. This is a range that the daily has created. We have a prominent high, prominent low. So I just take my fib and I stretch it out on this range, and then I go back down to the 4-hour, and first I got to make it show up. Okay. And so on that range now, at OTE, what has the 4 hours shown so far? What has the 4-hour done? We have balanced this range down. We have come right to the open. The previous day rejected the open. Price opens up Tuesday. It runs the previous day high. So now we've balanced this range. We're at OTE. We've ran the previous day high. And we've shown, if we go down to an even lower time frame, but just looking at this, what is the most probable trade to take here right now? Would be a short. It's done so much. It's completed lots of objectives right here. So then the probabilities are I should go short right here. Whether I believe that or not, if I'm just playing odds and probabilities, that tells me I should probably go short right here. And so we have to like look at these things because ranges are very, very important in trading because price tells you a lot in its relationship to how it reacts at parts of ranges, how it reacts at completely balancing ranges, how it reacts if it closes below a previous range that was holding price, right? And so if we just look at the 5-minute chart and we have previous day high right here, okay? And so here's the high that ran the previous day high. We get a very strong movement up, not much wicking, very strong candle down. Okay, if I just use a box for 50%, this high doesn't get ran again. And then as price comes almost to this high, there's a small imbalance right there, right? Little tiny imbalance that price got right there. Price drives back down, and now it's starting to close below this range, okay? Right, closes below, comes back up, and now what's holding? 50% of the range. Here's our OTE level on the daily. Look at the reactions of these candles at the OTE level on the daily. Price drives up, very massive push down on the 5-minute. Okay, that's a 713 to 748. That 5-minute candle is 35 points in the body. All right, push back up in OT, a very massive candle back down after the inducement candle. A nice push back down. And now every time price touches after these three legs, again, threes, you have the wick that's coming up, taps OTE, really rejects hard away. Price drives up, we're rebalancing a little bit of this range, taps it, and then we drive away. Now we're not even being able to hold 50% of the range. So again, look at even if you didn't get in here or you didn't soup the high, look at what this range is telling you. I just marked out a range that ran a previous day high that's in OTE that balanced the 4-hour area. That's all I did with this box is I marked it out and I'm watching price react around that range. As it starts to close out of the range again, it can't even get to 50%. So just like the daily or the 4-hour, when price was unable to get to 50%, what did that type of price action show us? It showed us that price is not willing to move through there. So then we're expecting lower prices. So then where in this area can I find price that can give me an entry and I can do something off of it? Okay, well, here's our last up close candle that hit 50%, and then we got this sell off. So then I could potentially use this open, right? We can highlight the whole candle, or I could just highlight the open and say, oh, price might come back in here and give us a strong reaction because we closed below this candle. And you get multiple entries into that open. And then price eventually fully closes out of the range and fails to return to that range. Okay, so I'm trying to share with you like the logic that I use for taking all this higher time frame stuff and now moving it over into some lower time frame, looking at ranges, and then looking at what's the highest probability for me to take in this area. and we can see the lower highs. And if you're working with your odds and probabilities of what's price most likely to do in this area, more than likely you're going to be on side of a trade, which is going to help you out a lot because then like if you're trying to go long here and you're like, oh well, let me wait for here to go long. Well, look at all these stop outs you'd be getting, or um, you know, taking losses because we're not looking at the big picture. Versus even if you got in right here and your stop is, let's say, the this previous high, this range, like you're getting in and like, oh man, price is really like it's really failing to like come back up into this area. And now you're in profit almost immediately. And now price is moving away. And then again, look at I measured this range. I was just kind of looking at price. So we have our low, our high, makes a retracement up, doesn't get to 50%, kind of comes back in, but closes out of the range, but comes back in just to hit the 50%, just hit this fair value gap, and then moves away. So now we can add from here. Now we can add in these positions. Okay, we can kind of see that happen over and over again. And now we are back down to the equilibrium point of that daily fib I used. So here was OTE. It's like I said, I don't want to rule out the possibility of that fair value gap tap tomorrow. That's a little bit deeper retracement. It's back up into the OTE on the daily. So it's possible to send a wick up there. So I'm going to keep that idea open. But right now we're at equilibrium on the daily. So this is not the most ideal place to take a trade because on the daily chart, we have premium, we have discount right here at the 50% mark. So price could move up and down along this area. It could come back down. It could go down, then come right back up. I've just taken the most recent high. Okay, here's a prominent high, right? And the low. Okay, so there's nothing in this range where I would fib anywhere else on the daily. And so look at candle bodies as it's come back up. So far we're holding this. Here's the Wednesday high. If we get a move up into here, um, this is a deeper retracement. And then again, if we're going to be bullish, like we tapped the EMAs and now we're going to be bullish again, then I really want to see price start closing on the daily up here. If not, then I want to see this area really hold candle bodies below it. That makes sense, everyone, for like my logic with price action and like using higher time frame points of interest. That's kind of a lot put together, but I promise you, if you do that, it's really going to help with like your how you pick your trades. Yeah, you just got to be careful of like if you zone in on the 1 minute too much and you forget where you're at in the higher time frame scheme of things, then yeah, you can get off sides. Yeah, it's recorded. It's recorded. It'll be in my channel. And I mean, even if you're more of like a like you like to scalp, like, oh, I just like to scalp 20, 30 points here and there. It can still be helpful for you on those lower time frames because then it to me these are just like odds, right? It's like LMT talks about like give yourself the best odds. If you're giving yourself the best odds and you're moving stops to like break even and the trades that are really going in your favor you're averaging up into, then the probabilities are is you're probably going to be profitable. All right, cool. So if there's no other questions, I'm gonna hop off. Yeah, work on that stuff that we talked about in here, Tanya. It'll help give you at least like even premium and discount levels of like 5 minute ranges. If you have to use a fib or a box or something, but like pretty much a main high to the main low where price isn't closing right back below it. I mean, even just by doing that and saying, I think price is going to go lower while I'm waiting for price to get into a premium area to take it short. Or, oh, if I think price is going to go higher from this point because we're at 50% on the daily and it's below it, so maybe it should retrace higher. Well, look what we get in the discount area. We get a turtle soup and then nothing breaks this low. Okay? So I've showed this before, but you can always just go, we're in an area of discount on the daily. Here's our equilibrium. We just ran this low on the 5 minute. We really rejected. I fibbed the low. Okay. Fib that first high that it puts in. And then what do we get? We get price tapping into even discount of this little range. Hits OTE on the very next candle, hits 50%, boom. So if we got in even at 50% and our stop was down here, now we've just had a trade that went from zero point 0.5 to zero point 0.5. We're not going to buy 80. We did 5 micros and our take profit was at, okay, that's a 1 to 2. We risked 287 to make 587. Almost a 1 to 2 basically. Okay, if you're using less, if you're risking under 200, you risked 172 to make 352. And this is a very mechanical scalp. Okay, just using logic of even higher time frame at the equilibrium on this daily range. Okay. All right. I hope this was helpful for everybody. I hope you guys have a great day and a great week. And we'll see you guys in chat. But I'm going to hop off if there's no other major questions. This was recorded again, so I will upload it and post it to my channel. All right. Thanks, everyone. We'll talk to you guys later.